You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. Welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from hopefully the ever-interesting Options Insider Radio Network. Been mixing it up for you a lot these days, trying to bring you more midweek live content. Had a great live interview with Dylan Radigan a couple days ago. It's on the network now as well. So more stuff filtering in midweek for you guys, you junkies who love the live. Of course, you can always grab that wherever you grab this fine program, including streaming live every Friday, noon Central, 1 p.m. Eastern via Mixler. Yep, it's that same Mixler link for all the live stuff that we do. So once you have it in your pocket, in your bookmarks, wherever you keep it, then you too can join us live. And of course, if you follow us on Mixler, as I know a bunch of you do, then if you have a Mixler account, then you get notified the instant we go live as well. So if you're one of those people who always likes it immediately delivered up to them, as opposed to waiting for it to come out on the full network on iTunes and everything else after the fact, then that's your easiest chance. And of course, we do have it also available on all the other platforms, iTunes, TuneIn, Stitcher, as well as our website, theoptionsinsider.com, as well as our mobile app, iOS, Android, and the beloved Fire OS. We're not on the Amazon Echo Look fashion mirror yet, but maybe we'll get that out there for the ladies in our audience who like to try on new fashions while also streaming vol views. Well, then, of course, we'll have you covered. So we'll look into that for you. In the meantime, though, however you listen, could be live, could be after the fact, could be streaming from our website, could be from a donkey cart in Czechoslovakia. However you listen, hit us up with those questions, those comments. We do love to hear from you guys. I don't know why, but we do. All right. And joining me on the old program today, let's start. Let's just throw a dart and see how they show up on my screen. All right, that's how we're going to go. We're going to go out, I believe, to the East Coast first, where he is ensconced in an empty cafeteria, or excuse me, an empty auditorium. He has driven away his entire audience, listeners. Yes, that sounds like him. He is the soon, someday, in the far distant future, to be Dr. VIX, a.k.a. Russell Rhodes, the senior instructor, head of education / business analyst over there at the CBOE Options Institute. Mr. Rhodes, welcome back to the program. And how did you scare off your whole audience?
I did not scare off the whole audience. I am at a derivatives and volatility conference at NYU. But derivatives and volatility 2017, the state of the art. They do this every 3 years, and it's I feel like just through osmosis, I'm getting smarter with the people that are in this room. Robert Merton, Robert Engel, both those guys have won Nobel Prizes. Everybody knows who John Hull is. We've probably cursed his book many times in our life, and he actually he came up with a new delta hedging way to delta hedge option portfolios, which was gonna keep me busy for weeks when I get back. And the last presentation I just heard was a different approach to looking at option pricing around earnings announcements with a professor. And I've done some work for my program on that and told the guy what I've done, and we've been coming at the same thing from different angles. So I think coming here for 2 days has created 6 months of work for me.
That's the goal, right? So I'd be curious to hear the earnings stuff. We'll get to that, of course. It is a big earnings week. A lot of names popping off this week, so we'll get to that in a little bit of our earnings volatility review. But before we do that, let me also welcome on the meatball, the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program. And are you anywhere interesting today, sir?
I am in beautiful Rochester Hills, Michigan, in the suburbs of Detroit. Tomorrow, my youngest son becomes a Catholic, so I drove my way up to Detroit area to execute the Catholicism.
There you go, keeping that 2,000-year-old mission alive, one Sebastian at a time. All right, with the team assembled and about to be doctrinated, let's dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. Like the man said, this is the portion of the program where we break down the week that was and indeed still is from a volatility trading and trending and analysis and just generally awesome perspective. We kind of dive into the awesome. At least we try to find it. Some weeks a little bit harder than others. This week, a little bit awesome to talk about, so you're in luck. And of course, we are streaming it live and recording it here right around noon Central on Friday, the 28th. Yes, April, already almost in the record books. Hard to believe. Year just cranking by, and another kind of quiet start, or end to the week here, mid-session. Most of the major indices mostly on, slightly up, slightly down. Not a heck of a lot of net movement on the day, except in the old VIX Cash land, where we're taking a bit of an inhale today, gaining back what it lost yesterday and a little bit extra, flirting ever so briefly with that 11 handle, but not able to stay north of it right now, right around 1095 or so out there in VIX Cash land. Pretty well shy, really, of, I think, even our most pessimistic observation last week, which was me. I was in the 1275 camp last week, and as of now, I'm almost two handles away, and I was the closest to it. So yeah, we were all. I won't even get to the meatballs. He was super buying the vol last week. We'll get to that in a little bit. But first, let's dive into this week. A lot of stuff popping off, a lot of things to catch our eye. Let's start in the suburbs of Detroit, where all good conversations about volatility start. Mr. Meatball, what caught your eye in this week's volatility action, sir?
With a lot of cool trades went up in VIX today that I saw. But let's start with what happened on Monday, and that was just the utter domination of implied volatility across the board. On what amounted to a 1% up move, we saw the VIX drop from 1460 to 10.5. Just an absolute drubbing of risk assets, and to me, that points toward some continued upside. Just a massive move in vol tends to mean that the next few weeks are bullish. That's the way I've always viewed it. With that big move, we've seen VVIX get to near lows. We've seen really some indexes get real low. I was looking at XLV, and that is super, super, super cheap. in terms of implied volatility. So on those, we saw some interesting trades. The aforementioned 50 Cent is back. He's bought 150,000 contracts in July and in August over the last day. And this was kind of an interesting trade. We had said, we haven't seen a lot of back spreads. Well, just in time for that, we saw a trader buy 13,000 by 26,000 of the May 2025 call 1x2s, the June 2025 call 1x2s 13,000 times, and the July 2025 call 1x2s. All so basically, a guy was scattershotting and hedges for the next 3 months. Those all went up yesterday.
And so those are the traditional 1x2 selling one buying two, correct?
Correct. Traditional 1x2. We just had a customer pay 12.5 cents for 25,000 of the May 11 puts this morning. I was annoyed I didn't get to sell them personally. And we have seen VIX futures. What's interesting is, they kind of bottomed the June future, got to about 12:30 on Wednesday and has not moved since. It is in a total total standstill. So all sorts of, May. The May 17, the May regular future has been between 12:30 and 12:50 since Tuesday afternoon and has not moved yet. So just some fascinating trading going on, and points to some interesting stuff.
No, I'm starting to believe that we are driving paper here with this program, because no sooner do we start extolling the virtues of the 30s, then they go away from our list, and now we start saying they're dead and they come back. And last week we kind of pronounced that the 1x2 had become at least a little bit moribund, certainly compared to the way it used to be. And now, lo and behold, they're back. So I think we are indeed driving paper out here through this program. Gotta be. There's the correlation. There's correlation and there's causation. You got both here. So, it's just any statistician, a lot of grist for the mill there. Speaking of statisticians, Mr. Rhodes, I know you like to look at all the stats, all the data. You're the keeper of all of our VIX stats. We did have a stat pop up on the radar this week, as Mr. Meatball just alluded to. It was on Monday, of course, the 24th, where we saw the, I think as you termed it, a drubbing mark, implosion, VIX apocalypse, call it what you will. It was a shellacking of all things VIX Cash. Remember last week, all of us, I think with the exception of the Meatball, he was buying a little bit of that French election ball, but all of us were pretty much looking at this as a traditional event risk type scenario. The question was just how much would it come off afterwards, and I think all of us were surprised at how aggressive. We thought they'd keep a little bit in the chamber for earnings season and, the traditional Trump premium and everything else, but apparently not. They just annihilated it after the election. It was off 25%. I know, percent of a percent, anathema, everyone hates it, but c'est la vie. That's just the common vernacular. We kind of have to get used to it. Off about 25%, makes it the fourth largest down day in the history of the VIX Cash. Number 3 coming June 15th of 2006. It was off 25.9%. August 9th of 2011, off 27%, and the number 1 day, surprise, surprise, May 10th, 2010, a.k.a. the flash crash, off nearly 30% in 1 day. So rock'em sock'em stuff. I'm sure, Mr. Rhodes, I know you've been traveling all week, but still, these record data days or near record days had to have kept you guys on your toes. I'm sure people were asking you about it, and probably just stirred up the well for a conversation about volatility over there at the Institute.
No, not really. Everybody's used to this by now. We really got, I typically when VIX drops back below 11, has a 10 handle or so, we start getting some press inquiries about how low VIX is, and are we going to hit, a single digit handle and stuff like that. And lo and behold, we really didn't get a whole lot. In fact, I didn't even realize we had a 10 handle till I checked quotes. I was traveling on Wednesday and didn't get to pay a lot of attention. I'll tell you what is not getting, it hasn't really been talked about. I tweeted it earlier today. VXV put in a 2017 low. And some of the academic work that I've done shows that VXV does a heck of a job leading VIX. So, and basically VXV at multi-year lows actually is really predicting that not only are we going to have nothing going on short term, I mean, that's stretching out into the summer. So, it's very possible that the high guess for VIX when we do the crystal ball is going to have a 10 handle in the near future.
Well,
if
Russell,
VXV holds up like it does.
If you look at the VIX futures, they're kind of agreeing with you. VXV is what, around 13? 13, and the June future is around 13 and a quarter. July is barely over 14. You have to go, October is below 16.
Yeah.
There's not a single future in the VIX complex pricing itself above 16.
Well, your smart partner, Andrew,
yeah,
he was asking me to take a look at 240-day VIX futures and see if this is the lowest we've ever been at. I don't have a worthwhile intern right now to pull all that data, so he's going to have to do it himself. But I wouldn't be surprised if this is the lowest we've seen, par-dated VIX futures.
At a minimum in a long time. I mean, I don't know why I am shocked at how low the back end of the curve and the speed with which everything went down. We were talking last week about the VIX whatever. What was the term that the article out there that's saying everything builds on everything?
The volatility feedback loop.
The volatility feedback loop. Well, here's what I will say is there was definitely some piling in on shorting this stuff right now out of the French election, and apparently North Korea is not a risk either. So, I don't know what to tell you, but they have just absolutely myrtleized this stuff, and I remain shocked that happened, but it's pretty fascinating. You just got to wonder. I mean, with VXV, with VIX, with VIX futures. I mean, are we in a period of, of 2006 to early 2007 where VIX is going to touch into the nines multiple times? It's the way things are set up. That's the way it seems.
It does seem kind of patently absurd on the surface when you list all of the myriad potential sources of volatility in the not even distant future, in the near future. We have our own president saying there is a potential for a very substantial conflict with the North Koreans. We, of course, have earnings season right now. There's the ever-present specter of the Fed. There's a litany of other macro issues to deal with. All of these could easily be potential drivers of very near-term volatility. And yet you're right, Mark. They've just annihilated it across the board. I mean, I was predicting an annihilation, but nowhere near. I think Russell was predicting a decrease in vol, and that's saying a lot for him. But no one on this show and no one that I know of talking to outside of this program came even close to predicting just the depth of the destruction that they had. And you're right, across the term structure. It's like they're just saying there's no chance of vol anytime in the near future, as well as talking Russell and his VXV. That's, of course, the 3-month vol index out there. No signs of life out there as well. So it is kind of odd how they've just kind of erased all potential drivers of volatility from their minds. This kind of goes back to what I've said before about the volatility market in general. It just seems to be one of the most just schizophrenic out there, where they have to have it, they have to have it, they have to have it. They can't touch it, they don't want it, and it's extremes on both ends. There's very little middle ground out there, and I don't know why it's shaped up that way, and yet it is. It's great for people who are out there loading up on VIX upside, because when it outperforms aggressively to the upside, and that's one of the key mechanics of the product, so why people like it. But still, at the end of the day, it is a bit of a head scratcher sometimes when they get in their overzealous period, one way or the other. This time to the downside, it's certainly interesting. Maybe there is something to that volatility feedback loop. Everyone and their mother piling into the short side. After all, it doesn't take a genius to wake up on Monday. We even had Tues talking about the option block, about how the just net vol crushing across the board was forcing him to do some adjustments months earlier than he thought he was going to, just because everything came in so aggressively. So it doesn't, even someone who doesn't watch vol on a regular basis, who is cognizant of options, will easily make the leap, the short cognitive leap, that's saying, hey, short vol may be a good place to be here. So it is. These are very interesting times, and certainly weird stuff. We're talking about the futures out there right now. The futures have about roughly a 2-point premium from the cash to the future. I think that's come in a little bit as the cash has rallied a bit today, and we're seeing about almost 3, about 270 or so out 2 months. Skew Index also still hovering in that slightly rich range, but I don't think anything disturbing unless someone out there is really super concerned about a 142 or so level in the Skew Index. I don't know, Russell or Mark, does that get the hairs on the back of your neck sticking up, or is that kind of more just more noise at this point?
It's more noise, but it's always a function of very low VIX. I can't get excited about Skew when VIX is so low, because it just really does get in there and fudge around with the denominator part of that. In fact, I'm at the conference with the person that created the Skew Index. I'm going to catch her during a break and talk to her.
Catherine?
Yep.
She did a good job. I've told her the only thing that I would like to see is, run a kind of a moving average over all of her calculations instead of end of day, and then, have it looking at the last 5 or 10 or 20 minutes, and so that we can have something that we could quote live. That would be amazing.
Well, that would be awesome. The other thing I would like would be, of course, this just probably gets too far into the weeds for any sort of mass market type index, but I would love to see it broken up even further, a separate call wing and a put wing index. That would be tremendously useful, because then we could end all this silly debate whenever we see this number spiking or dropping. What's driving it? What do? We have to dig into the call wings and the put wings and do that analysis ourselves. So I know that's pretty esoteric stuff, but still, put my 2 cents in for that, Russell, if you can.
Yeah, and Mark, the other one I like is I played around with multiplying the VXO, the old OEX vol times Skew Index to develop kind of how expensive are actual puts on a relative basis. It's something that actually you could look at as at a quantifiable volatility for puts that would be interesting to keep track of. I did play with that as well. So we've got all sorts of ideas for Miss Shailen, but we'll let her be and just tell her that the world needs a live Skew Index.
Yes. So
what did you call her?
Isn't it Catherine Shailen, right?
Oh, I thought you called her Shannon.
No, Shailen.
Yeah.
Shailen.
While you two debate names, let's kick things off with some. I know Russell, I can hear him. He's eager. He's chomping at the bit. He's chomping at something else while he's chomping at the bit there to get in some weekly options activity. So let's do it with Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, listeners, you know the drill. It's time for Mr. Rhodes to regale us with approximately 26 to 28 minutes worth of in-depth VIX options trading activity. The floor is yours, sir. Go.
Go. Monday. This is a really interesting trade, guys. And keep in mind, this was in the midst of a volatility crush. Somebody did a broken wing butterfly with May 3rd VIX calls. And they bought the 16 calls, sold 2 of the 17 calls, and then bought the 20 calls. And they did it for no credit or debit. They paid 15 cents for the 16s, paid 9 cents for the 20 calls, which comes to 24 cents, and then they took in 12 cents each for the 17 calls. So, if it's almost like flipping a big old coin or something and hoping it lands on its edge. But if they could get it, if they get the market to somewhere between 16 and 18, they'd be okay for settlement. I don't think that's going to happen. But the fact that we got the volatility crush, it's not hurting them at all, because everything's just going to expire out of the money. And this cost them nothing more than commissions. I saw a calendar spread, kind of interesting. Somebody sold the May 3rd 15 calls on Wednesday, bought the May 10th 15 calls, and they did that for a cost of 28 cents. You've got VIX calls expiring the Wednesday before the next round of the French election, which nobody seems to care about now. And maybe that's how it could work for them. And then the 15 strike calls that expire right after. So maybe they're hoping for a rise in volatility into the election. Who knows?
I like that trade, Russell.
That's kind of an interesting trade.
I continue to be kind of surprised that the May 10 doesn't have any bid in it relative to what's around it. we said this last week. I did a little 17, 21, 25 fly. I still think that that's going to end up being worth something when all is said and done. But, the market and VIX futures and VXV and everything is telling me I'm wrong. But I'm blown away that what happened with Brexit and Trump isn't causing any type of hedging along the May 10 contract.
Nobody's worried. Everybody's cool. Everything's going to be cool.
Well, they're the French. They never do anything crazy.
So somebody, let's see, continuing on here on Wednesday, somebody sold the May 3rd 11.5 puts for 40 cents. I hope they were exiting. And then somebody also sold, and these trades scare the heck out of me, and I saw a handful of these. Somebody selling the May 3rd 20 calls for a nickel. God, I hope they're getting out of a trade, not entering a trade. And then somebody selling the May 10th 19 calls for 15 cents. Same thing. I'm hoping there was an exit. On Thursday, somebody sold the May 10th 20 calls for a nickel. Still scaring me. And then here's another calendar spread, which I do find kind of interesting. Somebody sold the May 3rd 10 strike calls for $1.41, and then went out to standard expiration and bought the 10 strike calls for $2.31. Odds are, if they hold that May 3rd call, that came to a 90 cents cost, they're probably going to have a little bit of a cash debit because you never know, but we haven't had a VIX settlement under 10 in a very, very long time. But that's kind of an interesting trade as well. If you expect things to be calm and then maybe some things to fire up toward the middle of May. And then finally, somebody this morning was selling, and this is another, let's see vol stay low. Somebody was selling the May 3rd 11 calls, taking in 50 cents, and buying the 13 calls for 18 cents. So they're taking in a credit of 32 cents, and I guess hoping for a VIX settlement of 1132, or I guess less than 1132 come next Wednesday. So some stuff going on, very little looking for higher volatility, at least in the next couple of weeks.
Yeah, it has been fascinating to watch the ever since we started tracking this, and it hasn't been that long that these weekly VIX options have been available, but they have slowly continued to draw not just size, but as you mentioned this week and indeed last week, starting to draw some more interesting strategies. A broken wing fly this week for a pretty decent size. We had some pretty decent size, interesting trades going up last week as well. So it is fascinating to watch this stuff because the use case is evolving not just for size, but also for just the sheer variety of use cases. We used to see this in kind of the front month VIX where all this kind of action went up. Now it's slowly migrating into the shorter duration contract. Makes a heck of a lot of sense. We have quite literal weekend and weekly risk day, week in, week out these days. So it makes sense. People are playing in these things, and it seems like it just takes some time for people to pick up on these products, and surely they have. Getting into the week that was in the big time, the mothership, the meaty VIX options this week. Another pretty active week. If there's been kind of a narrative, there's been kind of a drumbeat we've been hitting pretty much all of 2017. It has been the steady rise of the ADV out there in VIX options. It's kind of the polar opposite of what we saw for the second half of 2016, where it was a steady decline all the way towards the end of the year, where we finally got around 550 or so, I believe, ADV, which VIX is usually in the 650 range. So to see it get that low for some time was interesting and perhaps concerning. Now, as the year started here, it's been slowly trending up. These days, right around 735,000. So pretty aggressive. I think most products out there would give their right arm for even half of that ADV. So things have been lighting it up out there again. In the VIX mothership land, today not so much, a pretty quiet day, only about 285,000 or so contracts on the tape as of a little bit past midway through the session here. So it seems like we'll be shy of the ADV unless our nickel friend comes back in for size again today. I suppose we'll see. But that said, the rest of the week was pretty active, about 571 on Thursday, but Wednesday 475, Tuesday being the big day north of the ADV 801, and then Monday even more. As you might imagine, that record-setting, record-breaking, whatever you want to call it, day, 25% sell-off, yes, percent over percent, Send the emails to Mark Sebastian, not to me. He's the one who loves it. 975,000 contracts, just shy of 1 million on Monday. That net VIX call to put for all you call put watchers. I know you're out there. I believe we even have an email about this. About 2.7 to 1. So nowhere near in the heady, the frothy land of, let's say, a 5 or 6 to 1, where people start to see alarm bells going off. And if you guys had to guess, Mr. Meatball, Mr. Someday Dr. VIX, if you had to guess, remember what I said earlier about us driving paper on this program with what we say here. If you had to guess right now what the number one with the bullet strike for this week is in the big VIX options, what would you guess? Just pick a strike, not even the month, just strike.
30.
Aha, yes, you are correct, sir. See? Making things happen here on the Vol Views show. We say the 30s are gone, we drive them right back. Number one with the bullet, size bullet, no doubt, at least partly and due to our all of our upside love friends out there this week. Size love for the 30 strike. It's back. It's funny because if anything, VIX Cash and VIX Futures have done nothing but erode since the last time we talked about them, and yet there's even more love for the 30s now than there was last week, when you could argue they were, if they're not, I wouldn't say relevant, but more relevant strike than they certainly are this week. And yet, number one with the bullet for size, the May 30s, 561,000 contracts open on that strike. So just crushing volume out there. And that wasn't enough for you in terms of optimistic paper. Number two with a slightly smaller caliber bullet, but still pretty impressive, is the May 35s. So 510,000. So we've been talking, and kind of the narrative out there, and the joke has been out there in the last couple of weeks in VIX land of, shall we say, optimistic VIX upside paper. Well, the open interest certainly reflecting that out there again this week as well. 510,000 of the 35s. Then we get a little bit more relevant, a little bit saner heads prevailing. It's funny to say that about the 20 strike, but c'est la vie, that's where we are. May 20th, number 3, 441,000 contracts open. Then we fall off again to where our usual number one tends to fall, somewhere around 350 or so. These are the May 21s with about 336,000 contracts. Number 5 on the list, the much more relevant May 16s, 303,000 contracts. I'm going to get back up the strike chain again. Number 6, the May 22s for 284,000. Bit of a May call strip until you get to number 7, the one and only put on the list, the May 13 puts. Just shy of 250,000, about 235,000 of those bad boys open this week. Number 8, the May 25s, 231,000. Number 9, the May 17s, again, finally some more relevant strikes, 225,000. And number 10 on our list, rounding out the top 10, the ever popular May 15s, 218,000 contracts. Pretty much all May, all the time this week. Only one put on the list. All May, all calls. That's where the action was this week. So again, you have a week where vol was, to put it mildly, annihilated, and you got all this interesting upside love, including a lot of 1x2s, and the traditional 1x2s the way we usually would have them, which is selling one, buying two. So interesting times out there in the vol space. About 8.8 million open overall, about 6.5 on the calls, and about 2.3 open on the puts. Mark and Russell, we talked a lot of interesting paper out there in the weeklies, and of course in the nickels and the 1x2s. Before we hop off VIX options, any other activity out there really catching your eye or think worthy of note? Or you have any further thoughts on our nickel friend?
Yeah, you know, we had a trader sell the June 50 calls yesterday in some size. I am seeing a lot of guys that are trying to use far upside calls to try and soften the price of some stuff that's a little meatier. So that could be part of where that activity is coming. But I'm also seeing a lot of guys just buying these cheapy puts, cheapy calls, because they think, it's an inexpensive way to get at it. But yeah, just lots of weirdness out there. Lots of I'm surprised that the 30s and 35s are so active, but they are.
Yeah, it has been a fascinating week to watch that. Also fascinating things to watch this week. It's earnings season. Big names popping off this week. So we like to do our earnings vol rundown. So this would be a good chance maybe for Russell to detail some of what he's working on in the earnings analysis space as well. But a lot of big names were popping off after the bell. Of course, we were doing some of it live on the Option Block show yesterday, where it seems like at least the narrative was in the first blush in the after hours, it was outperform after having a very quiet, staid quarter last time and a somewhat quiet start to this quarter with Netflix dramatically underperforming. It seemed like that might be the narrative yet again. Then last night, it was Rock'em Sock'em Robots with Amazon was up. They were pricing in about a 4% straddle, right around 37.5 or so. They were up well more than that in the after hours. Of course, fast forward to the open today, only up about 1.5% right now. So giving up a ton of those gains. I could already see, I haven't checked our email and our social media yet this morning, but I could already see the emails and the tweets coming in. Why don't we have after hours options? I could have sold my calls, et cetera, et cetera. I know, I feel your pain. This is an ongoing conversation. We're not going to solve it here today, but feel free to hit us up. I do go to OIC in a couple of weeks, which is the big options industry conference. I always put that question to all of the exchange heads and brokerage heads just to twist the knife a little bit. So I'll do it for you again this year. If you guys are so inclined. We also saw good old Alphabet popping off this week as well. They were another one that was looking pretty strong, and they remain strong. They were pricing in about $29, so a little over 3%. They were rocking well north of 4% in the after hours, and today, as of right now, they're up about 37 handles, or about a little over 4%. So at least them bucking the trend, not giving up the gains that they had in the after hours. So perhaps my email won't be as deluged as it has been in previous quarters. We also saw Intel pricing in right around $1.20 or around 3.2%. And right now in the after hour, or in the session, they're off about $1.40, so a little over almost 4%. So outperforming to the downside, but still an outperform is an outperform. We'll take what we can get, just have a little bit of sign of life here in the old quarter. And of course, S-Bucks. Starbucks, they were trading, they priced in about almost $2.50 yesterday on their straddle, so right around 4%, trading down today off about 2.5% or about $1.50. So another underperform there on the old earnings front. We also did see Chipotle earlier this week pricing in about $25. That's right around 5.5%. They were off about 1.5% today. I'll have to go see net exactly where they closed for the net move on the week. So they could have net on net outperformed. We'll have to see the net numbers. I know, Russell, you like talking earnings and you're studying earnings. So any of this week's action so far making it into your analysis? And I know you kind of teased it before. Give us a little tease again on what exactly you're working on with this earnings volatility analysis.
Well, this week, I mean, we just haven't seen a lot of outlier moves for the past 2 or 3 quarters. So we're finally getting to see a few of those, which stands out. What I've been doing is I have been looking at when we have outlier moves to the upside or to the downside, how quickly do the stocks right themselves? And do negative announcements have a bigger impact to the downside and persist longer than maybe a positive earnings reaction? And the finding is it tends to be that way, that that you see different reactive behavior on the downside relative to the upside, both price-wise and then also using Twitter data and taking a look at the tone that people have about stocks. It takes a little bit longer for the tone to turn positive than it does for the tone to turn negative after a positive earnings release.
That's interesting.
Could that perhaps be from the social media analytics guys over there? Is that where that data's coming from?
That's exactly where that data's coming from. I came up with a methodology to segment earnings announcements into upper quartile, middle quartile, and just by quartiles, very positive, very negative, and then positive or negative in the middle, and studied the ones that had very positive or very negative results, which basically means they either gained more than their average 3-year move or dropped more than their average 3-year move. So
interesting. Yeah, I had a good chat with him. I think Joe Gitz is the founder over there at the CBOE RMC conference a month or so ago. Maybe I'll have to get him on one of our programs here, maybe our tech program, to kind of pick their brains about what exactly it is that they do. He mentioned some of their methodology. Of course, that's an interesting area. A lot of research, a lot of machine learning going into trying to parse the massive fire hose that is social media, like a Twitter outlet, and trying to find the usable data, the usable signal amidst all that noise. Those guys claim to have that secret sauce, so it might be worth breaking it down over there. Anything else on earnings, Mr. Meatball, before we roll on into some of what our listeners have to say?
Yeah, I've been I've been pleasantly surprised by earnings. I think the big disappointer the last couple of weeks was IBM. That continues to just be a disaster. But Amazon up big, Google up huge, and actually Facebook is rallying harder than Amazon in percentage terms on how well Google did. Facebook's up over 2% just on the fact that Google is up 4%, which is kind of interesting. So that is one I'm going to be watching over the next few days as they and Apple both have earnings next week. I would point out that Apple implied volatility ahead of earnings. I mean, I can buy 16 and 17 vol in June ahead of their earnings. I was like, why wouldn't I buy calls on the world's most loved stock if vol is going to be 17% ahead of earnings?
You know, there is certainly an argument to be made for that. I saw someone tweeting out about Amazon and Google both up $40 in the after hours, and it's not $19.99. You know, so we are hitting into some heady, frothy days on these names. It might be interesting to see if Apple can retrace those glory days. You know, I was kind of wondering after last quarter if we saw so much dramatic underperformance out there. Maybe it was a bit of a vain hope, but I know the minds of a lot of the market and analysis their memories can be somewhat short term. And so they kind of think of what have you done lately. They thought maybe with last quarter, so much underperformance, they would probably maybe tighten things in. Of course, realize vol across the board has been pretty anemic of late as well. So that's another reason to maybe tighten up those straddles a bit. And so maybe we might be poised for a quarter of some outperformance. So far, a bit of a mixed bag, but maybe there is hope. We could see some life here in the for this season before it's all said and done. Got some big names popping off next week, so we'll be sure to talk about them as well. But now it's time to see what you guys have on your volatility brains, because it's time to open up the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, we got a lot to get to here in your questions. You guys know how to hit us up. The man just said it all. Let's continue on the earnings trend quickly. We asked you this week, what do you think? What's your pick for the largest percentage move post-earnings? We asked you this on Monday. We gave you 4 choices: Amazon, Google, Chipotle, and Microsoft. And we were kind of limited our analysis for the sake of this for pretty much the next opening on the morning kind of thing. So it seems like of the Amazon, the Googs, the Chipotles, and the Microsofts, you guys picked. Drum roll, please, as I pull it up here, listeners. For some reason, it's not on my screen, even though it was. Here we go. Your results here. There was a kind of a back and forth all week. It ended up being Amazon winning with 36%. Google, actually Chipotle, coming in number 2 with 30%. Again, I have to go look in the next day on Chipotle to see for sure. 26% on Google. Only 8% feeling the love for Microsoft. You seem like you were looking good with the Amazon bet in the after hours last night. Then Amazon pretty much gave it all up to this morning. Like I said, most of that move gone. So it seems like Google is the actual winner, even though when it comes to your votes, usually our audience pretty accurate on this kind of stuff. But this week, maybe forlorn hopes there when it comes to good old Amazon. We'll have some more questions for you about earnings next week. Got some stuff coming up here in the chat here. Trader 168 wants to know, since 2008, the 6-month VIX future is now October. We're lower than the current level was the period of July 2014 when the VIX jumped due to China's RMB devaluation, just before the VIX jumped due to Chinese RMB. So I think what he's saying, it's a little hard, read the tea leaves here. I think what he's saying is right now where we are, the 6-month futures right now are actually lower than when we saw that big pop due to that devaluation out of China. So VTrader may be reinforcing kind of what we were saying on the show earlier here. that it does seem like maybe things are overdone a little bit. I know it's heresy to say that, but maybe things a little bit too aggressively oversold. He's saying, we are at lower levels than that. I don't know if it's the situation is exactly analogous, but I remember having a similar feeling around the volatility levels and the aggressive shellacking of them on that Monday before the Brexit vote, of course, because everyone at that time was shellacking stuff as a result of, I think, a telephone poll out of Britain. Clearly, it wasn't hard data, and it turned out to be completely erroneous. I don't know if we're quite there right now yet, but I do have the feeling that perhaps we're discounting a few things that perhaps we shouldn't. Mark, this sounds like VTrader is talking up your book here. You agree with him?
Yeah, and Mark, you can tell that you feel like something, but you also aren't sure you're right because your voice. It's the one time your voice starts getting a little higher. You're going, it's like blah blah blah. We could see VIX in lower small.
Like I said, I'm kind of 50-50 on it. I'm not quite there, but I'm partially there.
But yeah, I covered all. While during the show, on the first over the first couple of minutes, I covered all of my May short vol, or most of my May short vol, and I also sold some May 11 puts. So I think that we are at a level where, it took a major event to push things, and after that China thing, we then rallied for another 6 months or so, and vol did come back down. But, it definitely feels like we're either at the beginning or the middle of a June, call it June 2006 to February 2007 period when vol just absolutely got murdered over and over again. Who knows if what could drive things higher. North Korea, healthcare, I don't know. Your guess is as good as mine, but I feel this guy's vibe.
Russell, are you masquerading as VIX trader, VTrader 168 in the chat room here? This guy's talking up your VIX buying spree here.
Who, me?
Yes, you.
Am I? If I go on Twitter as anybody but myself or CBOE, I get fired. So it ain't worth talking anything up.
It's not worth talking
especially
up
when I don't have money at risk.
That's no fun. All right. Speaking of talking things up, we got another question here from F Contango Trader. He wanted to know our 2 cents on an article. Actually, looks like it goes out of, I think, Bloomberg or Reuters from actually a couple of years ago, 2015. And he's citing that kind of infamous Chris Cole conversation we had I think it was about VIX moral hazards and the Fed stepping in and how it was kind of egregious that the Fed would do this and hence all that. And of course, our friends at Zero Hedge ran with that pretty infamously. That was an article from October 2015. As it turns out, Mr. Contango Trader, we felt your pain back when that article came out because we actually had Chris on to discuss that very article and it was from his, as I recall, his letter to his shareholders where he coined that term VIX moral hazard, and it got a lot of airtime, it got a lot of play. So we had him on the show to discuss that. So you can hear our thoughts on that as well as Chris's thoughts directly. We put him on the hot seat to talk about that. It was from our episode 184, entitled appropriately enough, Shadow Gamma and VIX Moral Hazard. So tune into that. You can find that on our website. Maybe on iTunes. I'm not sure how far back the archives go on iTunes. So our website or indeed the mobile app, the best way to search for it, or just search for Volatility Views 184, Volatility Views and Chris Cole. He's been on a few times, so you can find links to all those there. So there you go. You can get our full commentary on that. What else we got? Oh, commentary. Speaking of commentary, we got a comment here from Lolzi. I kind of like the handle. He or perhaps she saying this is about our debate from the past few weeks over VXX erosion. They're saying, can't we all just get along and agree that VXX erodes relatively predictably? Who really cares if it's roll yield or flying pigs as long as you can count on it with some degree of certainty? Yeah, I feel you there, Mr. or Mrs. Lolzi. We kind of admitted that last week. It is a bit of a distinction without a difference at the end of the day. We say it's somewhere around 75% predictability. What the actual driver, and we talked, you can really get into the minutia with this stuff, and we did. So check out those previous episodes. But yeah, I kind of feel you there. At the end of the day, it is a bit of a distinction without a difference. Russell's getting all up in arms. I know that's what you said there, sir, too, so you can have at it, sir. You agree with our friend here, Lolzi.
All we got to know is that maybe the XX goes down more than it goes up. Is that how you would put it, Mark?
Yeah, that's exactly right.
I would probably put it that way. Yes. Yeah, and it's. I think what does Andrew call it, Mark? Predictably crappy. And
it is. It is. But hedging in general is predictably crappy, and that's why we do it, because it's predictably crappy, so that our stuff that's predictably good doesn't scare us. That's how that works. And VXX is a hedge, and hedges are predictably crappy.
Gotta love the predictable crappiness of it. Let's see, we got time, I think, for about one more here. JJonQuin. He says, you say a VIX call to put of about 2 to 3 is normal. What's not normal? When should we get alarmed? 5 or 6 or higher? Yeah, we talked about this at the top of the show. Right now we're at about a 2.7 range. That is distinctly in the normal range. I'm sure Russell, if I have him go dig, can find the exact data point of what it is, 2.67, something along those lines. But it usually is somewhere in about what you say, actually, that 2, maybe 2.5 to 3 range is typically normal. Even beyond that, getting into the 4s or even 5s. I know personally, we've been doing this for a long time looking at that. That's not a level where I get super alarmed. Some people start doing it around 5. I say in that, more north of 5 range into 6 is where I start saying, okay, perhaps there's something afoot. Even that, I don't spend a lot of time following that. I know some people really do. But maybe at that point, I'll start looking. That's a good flag to say, hey, something's up. What is going on out here? It's worth, I think, further investigation. I don't know, Russ, I'm going to put you on the spot. Do you have the exact data point, sir?
Nah, but I'll get it. I'll
Good.
No, when I have a little downtime at this conference today, I'll tweet it out before the end.
Are you with me somewhere in that like 2.65 range, something like that?
Oh yeah, I would think between 2.5 and 3 would be my big guess.
Yeah.
So
same.
yeah.
So where's the demarcation
Same.
for you guys where you start paying attention to this thing?
4.
4, really? That low? How about you, Mark?
Yeah.
I actually don't pay attention that much to the actual level, but more the change in level. So, just the fact that call to put ratio is 4 to 1. I'm more interested in what was it last week and how much has been opened, as opposed to and did it come from puts coming off, or did it come from calls being opened? So I'm really interested in the actual kind of change and how quickly it does change, because I think that will tend to point toward, is there something specific, or is it just a general trend of more hedging? Those are the things. And then also you have to take into context where VIX is. When VIX is at its lows, you should see that number rise. So a VIX at 20 and a huge call to put ratio that's hanging there, that's going to be a lot more interesting to me than 4 to 1 when VIX is 10.5.
Again, it all goes back to context. Everything in the vol space has a context, including call to put ratio. And look for Russell's tweet for the exact number. I'm going to hang my head around 2.65. We'll see how close I am. All right, time for our next bit of prognostication. Is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Like the man said, this is the portion of the program where we attempt to wrestle that ever slippery pig that is volatility and hold it down at least until the end of the show this time next week. And we did a poor job of wrestling that pig last week. He was pretty slippery because he dodged all of us. So that shellacked us all. And as we are right now, closing out the show here, just shy of the 11 handle, like 1095 or so out here in VIX Cash. Our lowest prediction last week was 1275. I was on the low end. Russell was in the middle there, 13.25. Mr. Meatball, uncharacteristically buying some vol, buying a 16. So a wee bit off there, but all of us, I'm almost 2 handles off, so I can't really claim victory. I will go first though, because I was the closest, and I'm not buying what the market is selling here. I know there's every bit of chance we could continue to erode lower over this week, because like I said, once this narrative builds, they gotta keep selling it. They can't stop themselves. They can't help themselves in some cases. But I'm not buying it. I'm gonna feel we're gonna be higher next week. That's a rare thing. So mark your calendars. I don't think last time I've said that, listeners. Not many times. Not a ton here, because I don't think there's a lot of inertia to overcome in the marketplace. But I'm feeling slightly higher. I'm gonna feel 11.5. Sir, next closest, again, doesn't happen very often, was Mr. Rhodes. So you get to go next, Dr. VIX. What are you feeling, sir?
All right, you got to help me here, because I lost about 90% of what you just said, and I didn't hear your guess.
I said 11.5.
11.5. Ooh, I'm going to go 11.95, because we do have a French election a week from Sunday. I can't even stop laughing when I say that.
Interesting.
You know?
And Mr. Meatball
could have a little bit higher volatility.
Maybe, just maybe. Who knows? Mr. Meatball, you feeling some more vol? Maybe a little bit shy of 16 this time?
No, that was my whole French election surprise outlier trade. And really, that was just a hedge against my own personal portfolio. So I would have had at least a little. I was betting against my book.
I had a feeling you were playing it both ways there with that prediction.
That was called I was reverse jinxing my book. So the part I really wanted to win did. But now that I've taken off my upside, I can comfortably say that I think VIX is going to be is going to be 11 again next week.
All right, listeners, that's going to do it for our volatility crystal ball. It's also going to do it for this episode of Volatility Views. Mr. Rhodes, I know you're being called back to the classroom, to the conference. So really quickly, sir, what's coming up in the CBOE land when it comes to VIX, as well as what's cooking in the land of all things live vol?
Hey, are you and I going to do this thing from OIC?
I'll be there. Are you going to OIC?
Yeah, I'll be there too. So
okay, well, we'll do that.
That's really the next.
That's not next week, but it's coming up.
It's in 2 weeks. Yeah. So that's the next thing coming up for me is OIC out in Scottsdale.
Look forward to a vol views from live vol then, or from OIC. That'll be cool. That'll be it. We like those kind of conference rundown shows. So look forward to one of those in a couple of weeks, listeners. If I still have a voice left at the end of 4 days of recording. All right, thank you, sir. Now you go back to your world of academia. Find out some good stuff. Some good stuff for next week's show, sir. That's your mission. All right, he's gone. And, of course, Mr. Meatball, what's cooking? In addition to talking against your book in the crystal ball, what else is cooking in the land of Carmen Line and Option Pit? Dare I say, is there perhaps a masterclass on the horizon?
Well, there is a masterclass on the horizon. But right now we have an intensive coming up on May 6th. It's our Condor intensive. Go to optionpit.com/Iron Condor to check it out. And then after that, we will have an intensive.
I just like saying masterclass.
Should be fun.
I love the gradations of your education.
Oh, no, masterclass.
Masterclass.
It
sounds like Masterpiece Theater. It just sounds so classy. Head on over to Option Pit for a masterclass, followed by an intensive. Intensive doesn't roll off the tongue as well. We'll work on it. We'll workshop it after the show. Speaking of after the show, stick around, all you guys out there listening live. I know we promised we're going to have some kind of content in between. We didn't get it set up this week. Next week we'll have it for you. Don't worry. So all of you guys in the chat, I know it's a pain. We have to turn off the broadcast and turn it back on at 1:30 for TWIFO. So stick around. And next week we'll have it set up so you can have some content in between. So you can just sit in there. You'll have maybe some options news rundown, some other cool stuff. So you can just sit in the chat and stream our content till your heart's content, at least until TWIFO kicks off. So come on back. If you're joining us live, we'll see you at 1:30. You like all this vol talk? We're going to get into vol and crude and gold and a bunch of other cool stuff. So see us there in about half an hour. For all of you joining us after the fact, we love you guys too. And we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.